Hi, this is Nick Paulson, and this 5-minute Farm Doc focuses on historical production costs for corn in central Illinois and how they tend to move with corn prices and revenues. High commodity prices, excellent yields, and large ad hoc government program payments have contributed to higher farm income levels in Illinois for the 2020 to 2022 crop years. However, production costs have also increased substantially, leading to potential concerns over profitability in 2023 and 2024 if commodity prices decline while costs remain at current levels or experience further increases. Historically, per acre costs for the main direct inputs to corn production have tended to follow corn prices and revenue levels. Corn prices generally trended upward from 2005 until 2012, fueled by rapid growth in demand for ethanol production, as well as negative production shocks such as the 2012 drought. Fertilizer, seed, and pesticide costs also increased at a faster rate from the mid-2000s through 2014. Following that period, corn prices declined and then leveled off through 2019. From 2014 to 2020, fertilizer and seed costs both leveled off and even declined, while the rate of increase in pesticide costs became lower. Since 2020, corn prices and fertilizer and pesticide costs have increased dramatically, while the increase in seed cost per acre has ticked up slightly but remained relatively stable over the past 5 years. These correlations can also be seen when we look at relative changes over time measured by annualized growth rates over different time periods. Since 2000, input costs have all increased at a similar pace, 6 to 7% annually on average. This is comparable to average annualized revenue growth over that same 23-year period. Revenue growth from 2000 to 2006, led by increasing corn prices, outpaced input cost increases over the same time period. Then, increases in seed and fertilizer costs exceeded growth in revenues from 2006 to 2014. During the recent period of lower prices from 2014 to 2019, fertilizer and seed costs did decline moderately, but not as much as the decline in revenue, and pesticide costs actually continued to see moderate increases. Since 2019, fertilizer and pesticide costs have increased substantially relative to recent historical periods. This coincides with another period of price-led increases in revenue, which, in percentage terms, has been larger than the relative cost increases, suggesting that costs could continue to rise. We also looked at historical costs for the three major direct input categories as a percentage of realized crop revenues. As a share of revenue, no obvious trend exists for costs associated with fertilizer, pesticides, or seed over the past 23 crop years. Cost shares vary across time, but have averaged just over 17% of revenue for fertilizer, 8% for pesticides, and 11% for seed. Unsurprisingly, history shows that input costs adjust to market conditions. Costs tend to increase more rapidly during periods of elevated prices and can level off or decline during extended periods of lower prices. However, downward cost adjustments tend to occur with a 1 to 2 year lag relative to prices and revenues. Market-based indicators suggest commodity prices will likely be lower for the 2023 and 2024 crop years, relative to levels in 2021 and 2022. Costs will likely continue to increase in 2023 and even into 2024 given the historical lag in adjustment timing. Producers should be aware and consider this as they finalize remaining input and marketing decisions for the 2023 crop and look ahead to those decisions for 2024. If you'd like to read more about this topic, you can follow the link to the article, which is available in the video description.